Yes, so hi everyone and a warm welcome to our channel. I hope you are doing well. This is in continuation of the English revision series. Chapter number 1 we have done. This is chapter number 2, that is charge. Now in charge what we are going to cover is basically RCM, FCM, but we will also cover the interlinking with exemption wherever relevant. So there are a couple of entries which are linked to RCM, FCM, and there are the major chunk is the individual entries that we will cover in the dedicated exemptions chapter revision. Okay, and secondly we will cover the composition scheme in this particular lecture, right? So let's start. Chapter number 2, charge. Now here the charging section. What is charging section? Charging section is basically, see, we understood section number 7 that defines and that talks about the supply, that is the taxable event. But we need to have one section in the entire act which says that if there is a taxable event, we are going to charge GST. So for example, in your PGBP, that is section number 28 in Income Tax Act. Similarly, in our GST, we have section number 9 for the CGST. Similarly, section number 9 of the respective SGST, and we have section number 5 for the IGST. Is it clear? Now let's start. Section number 9, levy and collection of GST. So this is subject to, first of all, provisions of subsection 2, which basically covers the 5 petroleum products. As you know, the GST on 5 petroleum products will be at a later date when the council will announce. So whenever there is an intrastate transaction, what is intrastate transaction? You know, right? This is a revision lecture. We will cover that in detail in next chapter. So basically, place of supply and the location of supplier is in one state or one union territory. Although there are some other analysis involved, we will cover in chapter number 3. Okay, so there is an intrastate supply, then we are going to apply CGST except on 3 cases, 3 items which are outside the scope of GST. Point number 1. Item number 1 is alcoholic liquor for human consumption. Second particular item is the undenatured ENA, that is basically rectified spirit. It is a major raw material which is used for manufacture of alcoholic liquor for human consumption. I'm not talking about which is used for the industrial alcohol, that is denatured. I'm talking about undenatured. This is outside the scope of GST. This was a part of recent amendment. And third is 5 petroleum products. 5 petroleum products are basically the crude, diesel, petrol, natural gas, and aviation turbine fuel, which you can learn in a short form of CGPAD, right? So on this also there will be a GST from a later date. So currently there are 3 non-taxable items. All are goods, neither one, not even single one is service, which are outside the scope of GST, right? On what valuation will the GST will apply? It will apply on the valuation that we will calculate as per section number 15, chapter number 6. The maximum rate will be 20%. Correspondingly, maximum SGST will be 20%, and it has to be paid by the taxable person. Now, this is one important point you need to pay attention. They have used the word taxable person, not registered person. Why so? Because registered person means the person who has taken the registration under GST, but taxable person means the person who has taken registration plus also who is liable for registration. So if tomorrow my threshold is being crossed, let's say my turnover is exceeding the threshold, right? So in that particular case, I'm a taxable person and my liability is there under section number 9, although I have not taken actual registration. Otherwise, every person will say no, that we have not taken registration, so we are not supposed to pay GST. But no, this does not work that way. The charging section is putting on the liability and the onus on every taxable person, not only a registered person. So this is a wider term as compared to the registered person. Is it clear? Now, when we talk about RCM and FCM, it comes via 2 subsections. One is 9.3 and one is 9.4. 9.4 or with respect to IGST 5.4 is a very specific case of real estate industry that I'm not expecting a question on in detail. We will just cover it very briefly, right? ICM material has given it, but it has given in a colored, that black background form, a brown background form. So I'm not expecting a detailed question on that. So we will cover that, but briefly. And the main list we will cover is 9.3 with respect to goods and services. This is very much, yes, testable in your exam. Now, before that, we will talk about the IGST charging section, that is section number 5. It is exactly like section number 9 with 2 changes. Instead of 20%, this can be maximum 40%, right? These are the statutory limits. These are the statutory limits. Actual GST rates may vary as per the council. So here the maximum rate will be 40%, and one more proviso, it is new in section number 5, which is not in section number 9, is that IGST on goods which is imported into India. Now please understand, when there is a physical import of goods, it is going to cross the custom frontiers of India. There the custom authorities are already present. So why not to let them handle the portion of IGST? Why not let them apply and collect the IGST for our behalf? Because at the end, the custom authorities and GST authorities are working for the Ministry of Finance, that is the government of India only. So whenever there is any physical import of goods, then in that particular case, the portion of IGST, the levy of IGST, the collection of IGST, everything is handed over to the customs law. Everything is handed over to the customs law, and while you revise customs, while you see the customs provisions, you will see a calculation of IGST being levied. Is this clear? Okay, now one more small exception out of this exception is that this particular proviso which says that with respect to the goods imported into India, we are not going to apply IGST in our law. We will hand it over to the customs law, right? We will hand it over to the customs law, and the rate will be as per the customs tariff act. But this proviso is not applicable on notified intangible goods, that is currently the online money gaming. Currently the notified good is online money gaming. Now why so? Because online money gaming is not going to be physically crossing the custom frontiers of India, hence the taxation aspect of online money gaming, which is a good, because every actionable claim is a good. You remember the goods definition. Yeah, that's the reason that on this particular aspect, on the online money gaming, the taxation has been retained, the power to tax has been retained in the GST law. It is not handed over to the customs law. Okay, so here the taxation is going to be under IGST law only. Now let's talk about the three cases of that 9(4) or 5(4) that is very specific for the real estate industry. Now with respect to real estate industry, first we will talk about inputs and input services, then we will talk about cement. Now please understand, whenever there are any inward supplies, there are three types of inward supplies. One is normal input, one is input services, and one is capital goods. Is it clear? Inputs are basically the raw material consumable, and capital goods are the ones which are capitalized in your books. Okay, so the first one we are going to talk about is inputs except cement, because cement is covered separately, and input services, and then we will talk about the capital goods. We are focusing on the builders and promoters in the real estate industry. Now what are they being asked? That they are being asked to ensure that their purchase of inputs except cement and input services from the registered supplier should be at least 80% of the total. So sir, what are they trying to say? Let's say there is a total purchase of rupees 100, right? So they are asking the real estate promoters to ensure that out of this rupees 100 purchase, at least rupees 80 is from registered person, and if there is any shortfall, let's say instead of 80 I bought rupees 60, then whatever this shortfall is, in this particular case it is shortfall from 80, it is a shortfall from 80 rupees 20. So on this 20 the GST will be paid on RCM basis. So if your purchases from registered person with respect to input and input services fall below the 80% limit, whatever the shortfall is, on that 18% GST you have to pay to the government. Now actually in real life I am purchasing that from unregistered person, but still they are applying GST at the rate RCM basis. Is this clear? And with respect to cement, they are asking us to purchase 100% from registered. Even if 1 rupee is purchased from unregistered person, 28% GST you pay on RCM basis to the government. So I have to ensure that I buy cement, 100% purchase from registered person. And third is with respect to the capital goods purchase. Now capital goods purchase, you buy from registered, you buy from unregistered, I don't care. RCM is going to apply as per the applicable rate of that particular item. Now this is a very limited manner. I am not going to go into the detailed analysis. You're not going to find any question on this. Hence I want to move further with respect to the goods RCM list. Let's start. Now with respect to this goods RCM list, I have seen many students trying to attempt to learn the entire list by heart. It's not required. Okay, you just need to ensure that whenever a question is asked on this particular item or a specific item of the list, then things should click. That much understanding you need to have. Is it clear? That much learning you need to have. Okay, let's start. So first we are starting with cashew nuts, not shelled, not peeled, means there is no form of processing. It is a raw cashew nut. Supplier is an agriculturist and recipient is a registered person. Do you know what is the meaning of agriculturist? Everyone pay attention. Do you know what is the meaning of agriculturist? Agriculturist can only be two types of people. One is an individual and one is an HUF. Okay, so family, they are involved in the cultivation of land. How are they involved in the cultivation of land? Either they are doing their own labor, or their family is doing it, or there is a paid labor. So they have hired servants or something, but again there is a supervision involved of themselves or their family. So that particular person is somewhere, the feel factor of this agriculturist definition is they are involved in the agriculture either directly or they are involved indirectly by the way of personal supervision. But if there is a company, there is a partnership firm, there is a LLP, they cannot be agriculturist. Or if there is an individual who is not involved at the farm, who is not having any personal supervision, neither of himself nor of his family over the paid labor, and he's sitting somewhere else apart from that farm, then in that case, that is not the meaning of agriculturist. So this is something you need to make a note of, that agriculturist can be an individual or an HUF, no one else. Now, agriculturist is the supplier and recipient is a registered person. So registered person will pay the GST under reverse charge mechanism. BD wrapper leaves, that is tendu leaves, again agriculturist to registered person, because we are trying to give this relief to the agriculturist, right? Otherwise, then if his threshold crosses, then again he will have to go for the registration and everything. But in this current case, let's say this is an agriculturist and such particular supply, BD wrapper leaves, let's say he is supplying worth 1 CR, still he will not have to take registration. I will cover that in section 23 chapter number 8. So this is a relief for the agriculturist. Similarly, tobacco leaves by agriculturist to the registered person, same case, it will be covered under reverse charge mechanism. Next, essential oils other than of citrus fruit, it should not contain any citrus fruit that goes towards the luxury and everything. No, we are talking about essential oils of peppermint, other mint, examples spearmint oil, watermint oil, horse mint oil, bergamot oil, mentha arborescens. Again, you don't need to learn this, you just need to read this twice. Chances are that if this comes in the question, it will click in the essence that you will remember that this is under RCM, unregistered person to registered person. Now here, because it is not grown, so we are not using the word agriculturist, but again the supplier is an unregistered person, small guy, and then the recipient is a registered person. Tomorrow when he becomes registered, then it will fall back under the forward charge mechanism. Is it clear? Next, silk yarn by any manufacturer to any registered person will pay under reverse charge mechanism. A couple of points to be noted, everyone here. I'm using the word any person who manufactures. I don't care if he's registered or unregistered. I don't care if it's a company or a LLP. So this is something where the question paper can confuse you. You might think that, oh, the supplier is registered. No, I don't care. I just need to focus upon the whether the person is a manufacturer or not. He can be manufacturing it from raw silk, silkworm cocoons. I don't care. Okay, the focus is silk yarn, manufacturer to registered person, let him pay under reverse charge mechanism. Raw cotton is agriculturist to registered person. Here again it's grown on the land, hence we have used the word agriculturist. Supply of lottery by state government to an agent. I'm not talking about when it is sold by the agent to us as the public, there the FCM will apply. But when the state government, understand that lottery is a state government regulated subject, hence state government, UT or a LA, local authority, is supplying it to any lottery distributor or agent, let the agent have the headache of paying the GST on reverse charge mechanism. Next, any used vehicle, any seized or confiscated goods, any scrap, when sold by government to any registered person has to pay under the reverse charge mechanism. Couple of points to be noted, everyone here. When I say government, I am only talking about the government, not the government authority, not the governmental entity. You know G and G, we covered that in chapter number 4. Government authority and government entity is not covered. Second important point to be noted, Indian Railway is not covered. So if tomorrow Indian Railway is going to supply any goods to a registered person, forward charge mechanism will apply. This field factor you can learn for further reference also, that whenever the supplier is Indian Railway, the FCM is going to apply, not reverse charge mechanism. It has to pay tax, it has to take the headache of paying the tax. Priority sector lending certificate, this we have already covered in chapter number 1. Registered to registered does not matter, reverse charge mechanism will apply. And metal scrap, this particular summary you will be covering in the TDS chapter as well. But yes, metal scrap, I will give you a short summary. Unregistered to registered is RCM. Just pay attention. Registered to registered, registered to unregistered, unregistered to unregistered, and unregistered to registered. Just pay attention, everyone here. This is going to be taxed under forward charge mechanism, plus it will involve section number 51 TDS. Yes, this is covered in section 51. Registered to unregistered, it will be under FCM. Obviously, no question of TDS. The recipient is unregistered. Unregistered to unregistered, no tax. Don't say word exempt, just write no tax, because when you say the word exempt, it has to fall under section 2 clause 47 exempt supply. Do you know what is exempt supply? Exempt supply means something which is nil rated, something which is exempt under chapter number 4, notification number 12 2017, and one is the non-taxable item. But here we will say no tax. And next is unregistered to registered. Now this will fall under the reverse charge mechanism, because it is convenient for Nirmala Tai to say that this person is registered, let him pay the tax. No, but ideally this is wrong. The person is unregistered, you should not be paying the tax. The supply should be outside the scope of GST. But no, you have to apply reverse charge mechanism, because this has been covered in this particular list. Now next, with respect to the services, we will be starting with the list. Now before that, I am stating one line, everyone, and I really hope you agree. Okay, you have to agree, because it is true, and it is a part of the structured thinking that we apply in the exam. That whenever you think of RCM FCM for services, first stop, first take a pause and see if that particular entry is enjoying any exemption under chapter number 4. Sir, why didn't you say this for goods? Why didn't you say this before starting the goods RCM FCM entry? Because the goods exemption is not in your course, but the services exemption is a part of your course. Hence I am stating this particular line. I am repeating that before talking about RCM FCM, first ensure that the supply is not exempt itself, because if the supply of service is exempt, the question of RCM and FCM will not apply. It is moot, it is irrelevant. Okay, because when the tax is not payable, who is going to pay tax stands irrelevant. So now I am going to be starting with the GTA services, and I have opened already the relevant portion of the exemptions of the relevant entries. Okay, the relevant parts of chapter number 4 I have already opened. So when I will cover chapter number 4 exemption, I will not be going through these 3-4 entries again, which I am already interlinking while covering this particular chapter. Now step number 1 is to identify what is the meaning of word GTA, that is the goods transport agency. There are two conditions for the entry, for the supplier, for the entity to fall under GTA. The condition number 1 is that that person should be supplying services with respect to transportation of goods by road. Transportation of goods by road. This is my first particular condition. And second condition is that the person should be issuing consignment note. The person should be issuing consignment note. It is basically the details of the goods. The goods are going from which place to which place, who is paying the freight, who is the consignor, who is the consignee, everything you need to note in the consignment note. Is it clear? If one of the conditions is not fulfilled, the person is not a GTA. Now, second point to be noted, I have used the word services with respect to transportation of goods by road. I have not used the word service of transportation of goods by road. So means the GTA can provide services more than just the transportation part. For example, insurance, loading, storage, warehousing, it is a part and parcel of the GTA service, because the word used is with respect to. Is this clear? So these two conditions, once satisfied, the person becomes GTA, and then you apply the analysis of GTA. Now, there are a couple of exemption entries that I would like to cover before going to the RCM FCM part. First, service by way of transportation of goods by road is exempt except the service of GTA. So what does this mean? That if a person is not a GTA, let's say this is a bullock cart. Now this person is not going to issue any consignment note. So this is not a GTA. This is not a GTA, and if this is not a GTA, this would be a service which is exempt from the GST. Similarly, the question may ask that, the question may state one particular adjustment entry that your friend, let's say he had a truck idle for, for transporting. So you transported certain goods from his truck and he did not issue any consignment note. So that person, that your friend is not a GTA, because the consignment note was not issued, and hence this would be exempt. Is this clear? This is something a very important analysis. Now the main entry we are going to talk about is entry number 21A. Pay attention, everyone. Service by way of GTA to unregistered person, including unregistered casual taxable person, will be exempt. Other than. So all these people, A to F, in all these cases, the GST is going to apply. Now, who are these recipients? Before that, I would like to remind you what is the meaning of recipient. Recipient means the person who is liable to pay the consideration. Recipient means the person who is liable to pay the consideration. So if Mr. A is sending goods to Mr. B, but B is the person paying the freight, then your GT analysis will happen from the point of view of Mr. B, because Mr. B is the recipient of the GTA service. Is this clear? The person liable to pay. Also, it is possible that A may be paying, but later on A is going to get the reimbursement from Mr. B, because the contract states that B has to pay the freight. Then still the B will be, Mr. B shall be the person liable to pay the freight and B will be the recipient. I hope you are making this point clear, because unless you identify the recipient correctly, you are going to mess up the exemption entry. Right? Because exemption entry with respect to GTA needs to have an analysis of the recipient, and recipient you need to identify it correctly. Now, if these are the recipient A to F, then the GST is going to apply. Let's see who all recipients are covered. Any factory which is registered under the Factory Act, any society which is registered under the Society Act, any cooperative society which is established under the law, any body corporate under the law, any partnership firm whether registered or not, or any CTP registered under the GST law. Now, if you understand the field factor, what is being covered here? Here all the types of entities are covered, all the types of businesses are covered except an individual and except a Hindu undivided family. If you understand it carefully, individual is not covered, HUF is not covered. And if you pay attention here, they are asking these factories or societies to be registered under their respective laws, but their GST registration may not be there. So if I open a factory today and it is obviously not under GST, it is yet to start the business, but this factory, if my factory takes any GTA service, we will be hit by this particular clause and there would be no exemption. There would be no exemption. So these factories may or may not be registered under GST, but they are authorized legal factories or authorized society, cooperative society. Now, next understanding is the meaning of word body corporate. Body corporate means includes a company, also LLP. This is basically the same as section number 2, clause 11 of the Companies Act 2013. So anything which has a legal separate existence, that is a body corporate. It will also include a company incorporated outside India. So company and LLP are body corporate with respect to our GST law. And next they are saying partnership firm whether registered or not. Why did they say like this, registered or not? Because in our Indian Partnership Act, registration of partnership firm is not mandatory, it is recommendatory. Hence they have used the word registered or not. And last they have used the word CTP registered. A lot of people have a misconception that every CTP is registered. No, every CTP is registered only if they make a taxable supply. So if there is a casual taxable person who is not falling under any of the factory, society, company, LLP firm. So again, we are talking about individual HUF, and let's say he is not registered under GST. He is not registered under GST, then in that case, he will not be covered here. So for example, I have to move my goods from place A to place B. I called a GTA service. I'm an individual. I'm not a business. I'm not a company. I'm not a society, factory, partnership firm, CTP. Then in that case, the service will be exempt. But let's say my factory or my company wants to have any service. In that case, the GST will be applicable. Is this clear? Do you know what is the meaning of casual taxable person? You can have a read from the definition, but I will tell you, casual taxable person means a person who is doing business from that particular state where it does not have any place of business. So I am based in Pune, Maharashtra. If I come to, let's say, Kerala, and in Kerala, if I am making any business, if I am doing any supply for which and in Kerala, I do not have any place of business. I am there for a trade fair. I am there for 4 or 5 days of exhibition. There in Kerala, I will have to take a registration as a casual taxable person if I intend to make any taxable supply. Otherwise, then registration is also not required because there would not be any implication of GST. Is this clear? You can read the definition of the casual taxable person, and NRTP, that is non-resident taxable person, is something very, very similar to casual taxable person. Only difference is that NRTP is outside India person who is coming to India. He does not have any place of business or any residence place in India. And another difference is that in CTP, the person is going for the business. The NRTP, we do not apply any business test. We don't care if the person is having business in India. We don't care if any, what is his business outside India. We just care about the fact that he's coming to India. Okay, now let's move ahead. Now, as you saw in these particular cases, the GST will be applicable and also RCM is going to apply, because the list that you are finding it here, this is as exactly the same replicated in the charge related chapter. The charge related chapter means they are talking about the reverse charge mechanism, that if a GTA is giving service to specified recipient and the specified recipient list is same that I covered: registered factory, society registered, cooperative society under law, person registered under GST. But if that individual is registered under GST, obviously he is a person covered under the covered under the RCM, and the GST will also be applicable, because if you see here, they have used the word unregistered person. So if tomorrow there is an individual but who is registered, he is not unregistered, so tax will apply, and it will also apply under the reverse charge mechanism, right? Let's continue the list. Body corporate, partnership firm registered or not, and a casual taxable person. So what do you understand? That if these are the people, now apart from these particular people, who is left? Unregistered individual is left, unregistered casual taxable person is left. That too an individual only, or maybe a Hindu undivided family. Apart from that, all the types of business structures, be it a company, LLP, firm, factory, society, everyone is covered, provided they are legal and authorized and registered under their respective law, except in case of a partnership firm. So in these cases, the tax is going to apply, and the tax is going to apply on the reverse charge mechanism basis. On the reverse charge mechanism basis. Is this clear? Yes. Now please understand, there is one more exemption with respect to GTA, that is a good specific exemption. Now see, there are various exemptions. One is the recipient related recipient status exemption. One is a goods specific exemption. So if in the paper these are the goods which are transported, I will cover this in exemption chapter only, not right now, but I'm just giving you the gist of it, that if these are the goods which are to be transported, then you will apply the exemption, and once the exemption is applied, the question of FCM RCM is irrelevant. Clear? Okay, and obviously step number 1 analysis is whether the person is the GTA or not. Now let's proceed ahead. Two cases of non-applicability of reverse charge mechanism. Many people think that when I'm saying non-applicability of RCM means there is no GST. No. I'm saying no, non-applicability of RCM means FCM will apply. Analysis of whether GST will apply or not will happen in chapter number 4, not in chapter number 2. Okay, now see, first case they are talking about when the recipient of GTA service is a department, establishment of government, local authority or governmental agencies who have taken registration under GST, but only and only for the purpose of tax deduction under section number 51. So they are recipients, they are registered under GST, they are registered person, so they will not be exempt from the GST. But now their claim is that, sir, we are registered but only for the purpose of section number 51. As you know, section 51, there is a TDS compliance on certain government related people. So they say that we are registered but only for the TDS. We do not make any taxable supply, we do not conduct any business. So technically we are a registered person, plus please do not apply RCM. Law says okay, you don't have to apply RCM, but this is again irrelevant. Why? Because currently there is another exemption entry number 21B, which is exempting these kind of people from the GST altogether. So if these are the recipients who have taken registration only and only for the purpose of section 51, currently the GST is exempt, and hence the non-applicability of RCM point currently stands irrelevant. Tomorrow if the law changes that, then yes, maybe the applicability will come back. Okay, and B, when the RCM is not wanted by the GTA. Now the GTA says that I do not want the RCM, I want to go under the forward charge mechanism. I have to pick a rate of 12%. Now what rate he has to pick and whether he wants to go under the FCM or not, it is his choice. It is the choice of the GTA. Okay, pay attention. Nothing shall apply where the GTA has taken registration under GST and exercise the option to pay tax under the GST. So he is exercising the forward charge mechanism and he has issued a tax invoice to the recipient charging GST. Along with that, he has to make a declaration on the invoice. Declaration with respect to what? With respect to forward charge mechanism. So this will act as a safety. This will act as a safety for the recipient to not comply with reverse charge mechanism. Otherwise, tomorrow he may have a fear of non-compliance. So, but once the invoice has this declaration that the supplier has undergone under FCM, then the RCM need not be complied by the recipient. Okay, now please pay attention here. Tax rates and what is the ITC related aspect for the supplier. If GTA is exercising the option to pay tax under the forward charge mechanism, he has two particular options. He can go for 12%. In that case, he will receive whatever ITC he wants with respect to inward supplies. And if he wants to go for 5% to ensure that his cost is low, then there will be no ITC whatsoever. Now you may be wondering that, sir, why this kind of an option exists with respect to this GTA. Understand that for a GTA, the major supply is the petrol and the petroleum products, which is currently outside the scope of GST. So that main inward supply, if you exclude it, whatever other inward supplies are there, the GTA will analyze that what is the amount of purchases and how much GST is there and how much ITC I can take. So with that, he will make a business decision. He will sit with his consultant, GST consultant, and he will sit and take a conscious decision whether he has to go for 12% or 5%. That is not our headache. The question will tell us. But if it is a case of RCM, then 100% the 5% rate will apply. In RCM, 12% does not apply. So in the question, if it's stated that 5% rate is going to apply, then it means it is a case of reverse charge mechanism. If the question wants to go towards the fact that FCM is being applied, the GTA is going for the option exercising of FCM, then the question has to state so very, very specifically, right? And in that case, obviously supplier will not have ITC. One small clarification, regardless of what the rate is and regardless of who is paying it, the recipient is always going to take the ITC, provided chapter 7 ITC compliance is done. Many people get confused that if there is an RCM, will I get ITC? If there is an FCM, will I get ITC? Guys, it does not matter now. It does not matter. Whatever the case may be, recipient is going to take the what? The ITC. Okay. Now let me see if there is any question that we covered in the class on which I can test you. Okay. See. No, there was no question directly. I will cover one small question with 2-3 parts here itself. So for example, tomorrow it is stated that there is a GTA and GTA has given a service to a new company, new co limited, which has been incorporated, let's say today itself. Will this be taxable? Answer is yes, tax will apply. And that too, it will apply under reverse charge mechanism. If tomorrow there is a GTA which is giving services to, let's say, an individual, but he is registered, will tax apply? Answer is yes, tax will apply, and this will apply under reverse charge mechanism. If GTA is giving services to an unregistered individual, will tax apply? No, the tax will be exempt, and hence there is no question of RCM, FCM. Is it clear? Beyond this, they are not going to test in very much detail. You need to have a basic understanding of the entry. Now I would like to move further to the advocate services, and before that we will first cover the exemptions with respect to advocate. Okay, first we will cover the exemption part with respect to advocate. Now let's start. First, we will talk about arbitral tribunal and we will talk about senior advocate. Okay, so suppliers are arbitral tribunal or a senior advocate. Now first, a couple of questions that what is the meaning of arbitral tribunal? Arbitral tribunal are like judges. They are not exactly judges. They are basically to solve the dispute that is submitted to arbitration. And now you may have a query that, sir, in chapter number 1, schedule number 3, we know there is one non-supply with respect to the tribunal. So how come you are talking about the exemption entry in this particular case about arbitral tribunal? Isn't that the same? No, that tribunal is under law. This arbitral tribunal is as a result. This is as a result of the parties who are in the arbitration. So this is a private arrangement, not a law itself, right? So the tax is going to be the question of tax will be there, the supply will be there, and now we will put it under exemption if the conditions are satisfied. Okay, now arbitral tribunal or a senior advocate is giving services to whom? These are the recipient, these are the persons liable to pay the consideration. Case number 1, non-business entity. Case number 2, small business entity, and case number 3, government. Now, what is the meaning of business entity? Business entity means any person conducting business. Many people think that it has to be company. No, it can be anyone. Individual conducting business is also business entity. So case number 1 is non-business entity, means the person who is not doing any kind of business. Let's say a normal employee or a student, we are not a business entity. Okay, I'm conducting my teaching business, I'm a business entity, you are not a business entity at this point. Next, I say a word, I use a word in the class that is a very convenience related word. You will not use it in the exam. You will write this completely in the exam. It is a small business entity. Now, what do you mean by small business entity? In exam, you will write the business entity whose last year turnover was less than the registration threshold. The registration threshold is basically 10 lakhs, 20 lakhs or 40 lakhs that you cover in registration chapter. So your aggregate turnover did not cross the registration threshold. Aggregate turnover means pan India level, all the GSTs together, right? So that did not cross the registration threshold. In that case, you will be a small business entity. And third is the government. When I say government, I'm talking about all the governments: CG, central government, state government, local authority, union territory, and I'm also including the governmental authority and governmental entity. Since it's a revision lecture, I'm assuming that you know what is the meaning of GAG. Otherwise, I will cover that in chapter number 4 again. Okay, so these are basically the government established bodies only. Now, if any recipient apart from this, now what is a recipient left apart from this? There is a big business entity, that is the entity with last year turnover more than the registration threshold, that will be taxable. RCM, FCM, I'm not talking about it yet. I'm just covering the exemption part, that if the recipient is a big business entity, the tax will be applicable. Now another question, sir, what is the meaning of senior advocate? Senior advocate means an advocate who is designated as such by the High Court or Supreme Court. Another point to be noted, advocates are giving legal services, okay, not any other service. Now, when I compare to other advocates or a firm of advocate, means there is any partnership firm of advocate or a LLP of advocate or an individual advocate apart from senior advocate. So I'm talking about a junior advocate. Here the exemption is with respect to 4 specific types of recipients. 4 recipients I am going to cover here. First 3 are exactly the same. First 3 are exactly the same, and there is a new entry. Please pay attention. This is the people from the legal fraternity, that an advocate or a firm of advocate providing legal services. Now, if you compare this with above, there is one possible implication, that if a senior advocate is providing services to people from their own fraternity, from their firm, any advocate, then in that case, will there be tax? Possibly yes. But I will give you alternate point of view later. First, let's talk about what is given here, that yes, if there is any recipient who is an advocate himself, and this recipient here can be a senior advocate also, or a firm of advocate, then in that case there is an exemption. Because a lot of times it happens that junior advocate is assisting a firm, or a firm is assisting an advocate. So internally also services are generated. It is completely outside the scope of GST, because we want the advocate services to be less costly. Already they charge very high, so we want that to be a little bit less costly, right? Now let's link this to the RCM FCM part. Here in the RCM FCM they have written, first we will cover arbitral tribunal, that arbitral tribunal is giving services to any business entity. Now if you see in the below part, I have added this on my own, that this business entity is the one whose last year turnover is more than threshold. Is it correct or is it wrong? It is absolutely correct, because if it is a small business entity, it is anyways exempt. Then there is no question of RCM FCM. So if it's a big business entity, then the RCM provision will apply. And similar thing goes for advocate, senior advocate, or a firm of advocate, that if they are giving legal services directly or indirectly to a business entity which is a big business entity, then in that case reverse charge mechanism will apply, because if this is a small business entity, it is anyways exempt. Apart from this, now for the senior advocate, there is one analysis for which there is nothing in the ICI, no ICI question on that, but that is a common query that comes, so I will clarify it. Pay attention, that if senior advocate is giving legal services to, let's say, a firm of advocate or an advocate, prima facie this looks taxable, because this the fourth number in the list is not given here. Prima facie it may look taxable, but can I not apply the analysis that these people are also business entities? Because they are doing business only, the profession is a part of business. So can I not categorize them as a business entity? And if they are a small business entity, I may try to claim exemption here. Yes, that is a possible analysis, but I don't have anything under ICI's confirmation here. So I'm not hoping any question from ICI with respect to this. I will quickly cover one small example here. Let's say these kind of examples I give in the class. If there is a senior advocate giving services to a company whose previous year turnover was 2 lakh, but it is registered under GST, will this be taxable? No, it is exempt. Now, this is again a point of confusion for many students I have seen. Just pay attention. My last year turnover and my registration status are not directly linked. It is possible that my last year turnover did not cross the registration threshold, but I have taken registration maybe because of section 24 mandatory registration, maybe because of voluntary registration. And similarly, vice versa is also true, that my turnover may be crossing the registration threshold, but I have still not taken the registration under GST. Why? Because maybe the entire turnover is exempt. You know section number 23, chapter number 8, that if your entire turnover is exempt, 23 and 22 basically, then in that case you don't need registration. Or maybe my turnover is 100 CR but entirely is under RCM, let's say for the GTA, then again he does not need registration. So your registration status and your actual turnover in the preceding year are not directly linked to each other. That is something you need to make this in your in your mind. Okay, so here the person is registered under GST, but his turnover of last year is 2 lakh. So I have to focus here. Hence, it is exempt. Okay, next, senior advocate is giving services to Reliance Limited. Obviously, it's a big business entity. Last year turnover exceeding threshold, tax, and that too under RCM. An individual advocate, we can call this as junior advocate for our convenience, not in exam. Individual advocate giving to any person of their fraternity, exempt. Firm giving any services to a person of their fraternity, may it be it a senior advocate, exempt. Individual advocate or a firm or advocate, senior advocate not involved, exempt. Okay, now we can move to the next part. Sponsorship, which had a small amendment here. Now sponsorship, the supplier, first of all, do you know what is a sponsorship? For example, there is a cricket tournament in my area. Okay, there is a cricket tournament in my area. I go to PNG Jewelers. This is a big business group in Pune, and I ask them to give me some money. So they give me the money, and I name this tournament as PNG Cricket Tournament. So I'm giving them advertisement by the way of event sponsorship, event management, event advertisement. In general advertisement, no, it is linked to event. This is a case of sponsorship. And a lot of times there is a confusion that who is the supplier, who is the recipient. Simple formula, the person who is receiving money is the supplier. So I am a supplier and PNG is the recipient. So this is the recipient, because I am giving the service of what? Advertisement and promotion by the way of event sponsoring. Is it clear? Now here the supplier is whom? Any person other than a body corporate, and recipient is whom? A body corporate or a partnership firm, means a company, LLP or a firm. What is the logic behind this amendment? That if the supplier is a body corporate, means a company or LLP, why does it need the relief of RCM? It can pay tax on its own, right? So this would be a concern. This would be a business entity, maybe a partnership firm, or maybe an individual, or maybe a Hindu undivided family giving services to a company, LLP or a firm. So these people are going to pay tax under the reverse charge mechanism. I had covered a small example for students in the class. Pay attention. Supplier is Mr. Ram, who is registered. Do I care? No. Pay attention. I just wrote a word person. I didn't write registered person. So being registered still irrelevant. Recipient is a company, unregistered. Pay attention, unregistered, does not matter, RCM is going to apply. And here comes a query that if the person is unregistered, how come will he pay tax? Section 24. Mandatory registration will apply. Chapter number 8. Guys, see, understand, this is a revision lecture. Okay, this is not a study lecture. I cannot take you one by one point. I'm somewhere expecting that you know all the dots. I'm just here to connect the dots in the revision lecture, right? So you should be knowing section number 24. If you are completely blank, you don't know chapter number 8, and then you are sitting here that maybe this lecture will be a study lecture for me. No, because in the normal class we take 3 classes for this chapter that I am covering in one revision lecture. Okay, so there is something that we do there, na? We are not sitting idle. So here I'm expecting you to revise things on your own and then sit for the revision lecture, so the things get connected instantly, right? So the person is currently unregistered, but now RCM liability will fall on his head, and that's why under section 24 mandatory registration will apply. Next, supplier is a company, body corporate. You don't need to see the recipient status. FCM will apply. Next, supplier is Mr. Ram, unregistered. Any person other than body corporate, and recipient is a partnership firm, again unregistered, but section 24 will apply, and he will have to go for the mandatory registration. The firm will pay tax under the reverse charge mechanism. Now I want to move to next. Government service I don't cover here ever. In all the revisions I cover in the exemptions entry, because it is very comprehensive. I need to do that from there only. Next, I will cover property on rent, and property on rent I want to cover directly from a chart, because I know you have done it individually and there is a lot of confusion, because there is one exemption entry, then there is a RCM entry. We will do it here only. Now understand, whenever there is a property on rent, okay, exemption with respect to property on rent is only for a residential flat and the residential flats which are given to students. So there are 2 entries, entry number 12 and entry number 12A. Okay, in entry number 12 there are 3 conditions. Condition number 1 is that it should be a residential property. Condition number 2 is that it should be for residential use. And condition number 3 is that the recipient should be unregistered person, except in one case. That if the person is registered and if he's a sole proprietor who has taken the flat in the personal capacity, then we are still ready to give the exemption. So 3 conditions will apply. Okay, now pay attention. If it's a residential property given for commercial use, your exemption entry has gone because you didn't use it for residential purpose. Here the tax is going to apply. Tax will be applied under reverse charge mechanism if recipient is registered, because the RCM entry simply states that residential property will be taxed under RCM if recipient is registered. Why does it being taxed, if there is an exemption or not, that it does not talk about. We talk about it in the exemptions entry that I covered, entry number 12. So because it's a commercial use, the tax is going to be there, and the tax will be under RCM if recipient is registered, otherwise FCM. Okay, so residential property, residential use, 2 conditions are satisfied. Third condition we will see with respect to entry number 12, that recipient is unregistered, exempt. But as I told you, there is one exception, that if the recipient is registered but sole proprietor case, still exempt, otherwise tax under RCM. Tax under RCM because it's a residential property given to a registered recipient. And what is entry number 12A? All the PG hostel camps are excluded from entry number 12 because recently entry number 12A came and it provided 2 more conditions to be complied. That is minimum 90 continuous day stay. So if there is a PG where you go for Saturday, Sunday, your tax will be there, the GST will be applied. And second condition, the amount is not too much. It is not a luxurious PG, that the rent is up to 20,000 per person per member. If that is the case, it will be exempt. In other cases, the tax will be applicable. And obviously, the students would not be registered person. Hence, I will say FCM will apply. Now here the query comes that sir, FCM will apply, is applicable, but will GST actually apply? It will depend on whether the supplier is a big person or not. See, the focus of exemptions chapter and RCM FCM is that whether RCM will apply or not and whether exemption will apply or not. So all the other cases, the tax will apply, FCM will apply, but actual GST, in real life, the GST will apply only if the supplier is crossing the threshold. So for example, it's a private coaching service. Private coaching is not under RCM, we will state FCM. But actually, will I tax GST or not? Will I charge the GST or not from you? It depends whether my total threshold is crossing 20 lakhs or not. I hope you are getting the point. Okay, and if it is a commercial property, see, commercial property, there is no exemption whatsoever. Only there is one RCM FCM entry that I will quickly cover, that if there is an unregistered supplier giving his commercial property other than residential, means commercial property on rent to a registered person, then reverse charge mechanism will apply. But this registered recipient should be other than the one who has opted for composition levy. This is a relief for composition scheme. Why is this a relief, sir? See, composition levy, why a person goes? Because he wants to save himself from tax compliances. And if he falls under this particular case, let's say he takes a shop on rent from an unregistered person, then he has to comply with RCM. This is a headache for him, na? Then he will say to Nirmala Tai that Nirmala Tai, I came into composition scheme for saving myself from tax compliances, and now you are putting this tax compliance on me. So here there was an amendment that commercial property on rent from an unregistered person, if he is registered, recipient is registered, but under composition scheme, RCM will not apply, tax will not be there. Why tax will not be there? Because supplier is also unregistered. Is it clear? Don't use the word exempt. Say there is no tax. Pay attention here. So in the commercial property space, there will be 4 cases. Registered person to registered recipient, tax under FCM normal. Registered to unregistered, tax under FCM normal. Unregistered to unregistered, obviously there is no tax. Unregistered to registered under regular scheme, RCM will apply, the entry which I covered. But if the person is registered under composition scheme, there will be no tax because this is an exception. And this similar benefit is also available when security personnel are provided on rent. That is security personnel service. Is it clear? Next, can I move ahead? Yes. We will talk about TDR, FSI and lease. Simple, what happens? TDR, FSI is the transferable development right, floor space index. These are the rights associated with the landowner, which is a property owner, and he gives these rights to a real estate promoter who will build a building, who will build flats, and he will sell the flats. Simple case. This is a service of transfer of these particular rights on which the tax will apply or not. The tax will apply or not will depend on whether the real estate promoter is going to pay GST on the constructed flats or not. So basically, very logical. If the DLF is going to pay GST on the GST on the flats, then in that case here the GST will not apply. If the DLF is not going to pay GST, then here the tax will apply, meaning which that if GST sells constructed flats, if he sells constructed flats, means after construction the flats are being sold, no GST. As we covered in schedule number 3, there will be no application of GST, then this particular taxation will apply. This service will be taxed, and this service will be taxed under reverse charge mechanism, and the entire 100% amount is not taxed. 1% or 5% of the value is taxed. 1% in case of affordable and 5% in case of non-affordable. Is this clear? And this lease is 30 years lease. Please pay attention. And suppose the DLF is selling under construction flats, so their GST collection is there, GST is being levied by the government, so this service will be exempt from GST. So once government is basically applying very simple logic that if I get my GST in the flat share, a flat sale, then in this particular transfer I don't want any GST. In real life also the GST and the levy and the collection is deferred till the point we get clarity here. There's a proper notification for that. For exam, this is more than enough. This is covered in your exemption chapter as well. Next, services by director. I'm talking about the official services, not the personal services. So whatever official services are done by director for a company, the company is going to pay tax under the reverse charge mechanism. If there is any personal service, then obviously personal service will be under forward charge mechanism, and I'm talking about a director who is not an employee, because if he is an employee, then schedule number 3, it will not be a supply itself. Insurance agent giving services to any insurance, general or life, RCM will apply. Recovery agent giving services to bank, financial institution, NBFC, RCM will apply. If there is anyone apart from bank or NBFC or a financial company, then in that case forward charge mechanism will apply. So if let's say recovery agent services given to a trader, FCM will apply, not RCM. Next, music industry. So let's say Anu Malik, he's a very famous singer. So we sing his song in the class. I don't know any singer from South. Maybe you will tell me in the comment box. So yeah, basically there is a music composer, there is a photographer, artist. So these are creative people who own copyrights with respect to original dramatic, musical or artistic work. They give this particular transfer. They transfer this right to use, and in return they earn royalties. This is a service, right? Schedule number 2 we have covered that everything with respect to IP is under service. So this is a service, and they are transferring this to a music company producer who is located in the taxable territory. Then RCM will apply, and similar thing applies with respect to author who is holding his rights with respect to original literary work. Now, why author is given separately? Because in case of author, he has a right to pay tax under the forward charge mechanism. Similar to GTA, he has to opt for it. He has to give a declaration on the invoice. He has to file a declaration. He has to pay the tax invoice, charge tax invoice, and pay the tax to the government. Only difference here is that there is a cooling off. There is a lock-in period of 1 year. GTA, you didn't study any lock-in period. Here there is a lock-in period that 1 year from the day to exercise this option, you cannot withdraw from this particular option of FCM. Okay, otherwise you will do FCM, then tomorrow you will come under RCM, again FCM. No, that cannot work. Next, services to RBI. Now there is a overseeing committee for high level stuff, for high level decisions, high level transactions. They charge basically a fee from the RBI. RBI is going to pay tax under the reverse charge mechanism. DSA, that is the direct selling agent related to banks and everything. So basically if it's an individual DSA, then RCM will apply. But if it is other than individual, then in that case FCM will apply. Recipients are the banks and financial institutions who are located in the taxable territory. Is it clear? Let's move to next. Okay, so next one is your business facilitator and business correspondent. I will just take you to the relevant exemption part first. And before starting with the discussion, first you need to have a brief understanding of what is the meaning of business facilitator and what is the meaning of business correspondent. Now understand, they are basically the persons who are helping to grow the business of banking companies and insurance companies. They operate in both urban area as well as the rural area, but obviously we are going to promote rural area growth, and hence you will find an exemption with respect to the rural area branches. Now basic difference between BC and BF, that is the business correspondent and business facilitator, is business correspondents, they have a control over the funds as well. So comparatively, they are more involved in the business. They are more responsible for the business. They are conducting proper business. Hence, we don't want to give them the RCM benefit. We want to give business facilitator the RCM benefit because they are comparatively less involved. So if a person is more involved, then let him pay tax under FCM. Let him conduct his business properly, just like any other normal person. But in case of business facilitator in banking industry, we don't want to put him under the burden of paying the taxes. Hence here RCM will apply. This is the feel factor you need to understand. Okay, so business correspondents are basically more involved. They are more they hold more responsibility. They also have control over the funds that the business facilitators do not have. So first I will cover the exemption part with respect to banking industry. Then I will see what is the rural industry part. With respect to the banking industry, all the services of business correspondent as well as business facilitator, as well as if there is any intermediary or agent who is working for the BCBF, then in case of rural area branches, this is completely exempt. So if it is a rural area branch, it is a banking industry, the BFBC services as well as their agent services are completely exempt. Hence the question of RCM FCM stands irrelevant. But if this is an urban area branch, then what you have to do? Pay attention now. If it's an urban area branch, the business correspondent will pay tax on his own. You understand the feel factor, right? Business correspondent will pay tax on his own. But if it's a business facilitator, he's not involved in business that much, the bank will pay tax under the reverse charge mechanism. And what in case of intermediary or agent? Guys, pay attention. What in case of intermediary or agent? If intermediary is giving services to business facilitator, means he's also small guy, So here normal FCM will apply as in any normal business. But if any agent or intermediary is giving services to business correspondent, in any case, BC is going to pay tax, right? So why to trouble him? Here RCM will apply. So if you see the charge related provisions, you will find two entries with respect to RCM. BF giving services to banking company, not BC, an agent of BC giving services to BC. So BC is already paying the tax. Why to trouble the agent? Let him pay under the RCM. So you have to understand the feel factor, otherwise it will become quite clumsy to learn. Okay. Another important point to be noted, here they have only mentioned a banking company, not an insurance company. I will first cover the insurance related exemption. See, with respect to insurance sector, everything is same. That we are going to give exemption with respect to rural area, not urban area. But in the rural area, only with respect to BCBF, intermediary agent services are not exempt even in rural area. This is the only difference. Is it clear? And now if you pay attention here, with respect to the RCM entry, only a banking company has been covered, not an insurance company. So BF giving services to insurance company, no RCM, you will apply FCM. But here, even if this is with respect to insurance, because they have not written the word business correspondent with respect to banking. And in that case, if it is an agent of BC giving services to BC in insurance sector, still RCM will apply. Now I know it's a lot of confusion. I will clarify that quickly. I will clarify that through a small example with various parts. Pay attention everyone. If it's a banking company and it's a rural area, you don't have to analyze anything. Everything is exempt. If it's an urban area, we are going to tax it. BC giving services to bank, BC can pay tax. He's conducting business, FCM. BF giving to bank, BF is not involved that much in the business, benefit of RCM, yes, given. Agent giving to services to the BC, BC is paying tax, let him pay under RCM. Agent is giving services to BF, now BF is also small guy, agent is also small guy, let this be taxed under forward charge mechanism. But when I cover the insurance industry under rural area, BC BF is exempt, that is same as banking industry, but agent and intermediary services are not exempt. So agent giving services to BC, you are going to tax under RCM. Why? Because if you see this entry carefully, they have not written banking company here. It includes an insurance industry as well. So here you will apply RCM, but agent giving services to BF, you will apply FCM. Okay. And if it's an urban area, everything will be taxed. This is same as we covered above. What about this? BC giving services to insurance, tax, and BF to insurance, because here they have used the word banking. BF giving services to banking, not insurance. Hence, I will apply forward charge mechanism, not the benefit of RCM. This is a mistake area that is possible in your exam. So this is what sums up the BCBF entry. Okay, next I want to move to the security services. Security services means security personnel are provided. Who is the provider? Any person other than body corporate. So it can be an individual, it can be a partnership firm, it can be an Hindu undivided family. Company and LLP, no, not allowed. Sir, pay attention that here I have not used the word registered or unregistered. I don't care. I just need to pay attention to the structure of the business entity. they are providing security personnel to a registered person, he will pay tax under the reverse charge mechanism. So who is the supplier? If the supplier is any person other than a company or LLP, and the recipient is a registered person, both these conditions should be complied, then in that case the reverse charge mechanism will apply. But now here there are two exceptions. They have written three, but third one is basically they have written registered and third is unregistered, so obviously that is an exception. But first two are very important to understand. See, first exception is those people, as we covered in GTA, they are registered under GST only and only for the purpose of section number 51 TDS, and they are not making any taxable supply on their own. So these are the government departments and agencies who have registered, so they are stamped, they have this tag of registered person on them, but guys, they are not doing any taxable supply. They are registered solely and solely for the purpose of TDS deduction. Now they say that no, even if we take any security personal service, we don't want to pay tax under RCM. This benefit is given, this relaxation is given. And second is a composition registered person, similar to the commercial property rent that we covered. Commercial property rent, you remember, recipient is a registered person other than composition. Same thing you will apply here, same benefit you are giving for the composition person. Next is the securities lending scheme. I already covered in chapter number 1. Lender is lending the securities to the borrower. The borrower will pay the tax on lending fees under the reverse charge mechanism. Next, motor vehicle on rent. 2-3 very important points to be noted here before we apply the RCM concept. Motor vehicle on rent. Which motor vehicle? I'm talking about the motor vehicle which you are using for the purpose of passengers, not goods. This is not of goods, it is of passenger. Okay. Second, what do you mean by motor vehicle on rent? Means it is at the disposal of the recipient. Disposal of the recipient, he will use it as he deems fit. I'm not deciding any route, I'm not deciding any time, nothing else. Okay. Third important point to be noted, everyone, the cost of fuel should be included in your total consideration. He is not going to incur the cost of the fuel. You as the supplier are going to incur the cost of the fuel, and you will include it in whatever consideration you are charging. Now pay attention here. There are three basically conditions to check in the exam whenever you apply this motor vehicle on rent. Okay, so the first condition is about the GST rate, that if this has to fall under the RCM, the GST rate will be 5%. Now, how it will depend? If the supplier wants to go under the FCM and he wants to charge 12%. Now, why will he charge 12%? He wants full ITC. If you carefully analyze, this is somewhat like GTA, and why in these two cases you will find this rate difference and the option of the supplier for going FCM or RCM is that because one of their major inputs is this petrol and diesel, which is outside the scope of GST. So it's his conscious business decision whether he wants to go for ITC and apply 12% or he wants to let go of the ITC and apply 5%. Okay, so this is because their ingredient, their raw material is a non-taxable supply. So he will see that whether the amount of GST involved in other expenses apart from the petrol diesel is worth enough, is substantial enough to go for 12%. So that's his business decision. Hence, in these two cases, these two entries, you will find this kind of a choice making on the part of the supplier. Okay, so if the GST rate is 12%, then he will be getting the full ITC, supplier will be getting the full ITC on whatever his inward supplies are. In that case, the FCM will apply, not RCM. So step number 1 for RCM is GST rate should be 5%, and in this case the supplier is still going to get the ITC, but only for input services that he may use for the set off of output liability of any other business related GST payable, right? So GST payable with respect to any other business. So first condition is GST rate would be 5%. Second condition is you have to check what is the type of the supplier. If the supplier is a body corporate, means he is conducting a proper business, owning a company or LLP, then why does he need the RCM benefit? No, then in that case we will give him FCM. If supplier is other than body corporate, means it's not a company, it's not a LLP, maybe it's an individual, maybe it's a firm, maybe it's a HUF, then in that case also we cannot conclude whether RCM will apply or not. We will have to check what is the type of recipient. If recipient is other than body corporate, means recipient is not that big enough a guy, he's just an individual or HUF or a partnership firm, then again why should we apply RCM burden on him? You apply FCM. But if the recipient is body corporate, then yes, all these three conditions are met. This is the cluster that you need to pay attention to in your exam. In this cluster, condition number 1, condition number 2 and condition number 3, the RCM will apply. Now what are the three conditions? If we quickly try to recap, the rate would be 5%, the supplier should be other other than body corporate, and the recipient should be body corporate. So we can ask recipient who is conducting business in a proper company and LP manner, so yes, you can pay the GST. And if he is currently not registered, then he will have to get registered under section number 24. If he is already registered, does not matter, he will pay tax under RCM. So regardless of what the status of registration is, RCM will apply. And here a query comes that what if the recipient is unregistered? That's where I'm telling you chapter number 8 section number 24 will apply. Mandatory registration provisions will apply on him. Okay, another point to be noted, everyone, there is a difference between giving motor vehicle on rent versus transportation of passenger service. So if I am giving you the transportation of passenger service, this is different from vis-a-vis compared to when I am giving you the motor vehicle on rent, that you apply, you drive the motor vehicle as you deem fit. So there is a difference in both. The SSC entry, the SSC code, service accounting code, is also different for these two entries, so pay attention in the exam. Next is with respect to IGST. Now whatever entries we covered above, that is already in IGST as well, because if the nature is inter, then IGST will also be under RCM. But there is one more entry we need to analyze, that is import of service. Now here you just have to understand this thing: supplier is in non-taxable territory, recipient is in taxable territory, and it's an import of service. In this case the RCM will apply, because we cannot expect this outside guy to pay GST in India, so he will pay tax to the Nirmala Tai under the reverse charge mechanism. Under the reverse charge mechanism, the tax payment will be made. But there is one exception. What is the exception? Exception is OIDAR service, whichever is obtained by a non-taxable online recipient. Do you know these meanings? Understand quickly. OIDAR service is online information database access retrieval service. These are the services where there is a use of IT over internet means, and it is impossible to give without the use of IT. This is the basic meaning of OIDAR. And what do you mean by non-taxable online recipient? Non-taxable online recipient means an unregistered person who is importing OIDAR service from outside India. Now, for example, let's say you are a student. Tonight, let's say you were scrolling on the internet and you found a good ebook on a topic of your interest, and you bought a ebook. Okay, now that ebook is an OIDAR service, because without the internet and use of IT over internet means you cannot see that ebook, right? And let's say the publisher or the owner of that book is in UK. Now can we ask you as a student to get registered and pay tax under the GST? It would be very absurd, right? So in that case, they are giving you the relief that you are an NTOR, you don't need to pay tax under RCM. Here FCM applies, for which chapter number 3 will bring you to section number 14. Section number 14, where IGST is to be paid under forward charge mechanism, and linked to section number 24, that is mandatory registration. It will ask this particular supplier to get registered in India, pay tax under the forward charge mechanism, and for that you might have heard the words as simplified registration scheme, single registration and simplified registration scheme. So he will take a single registration all over India and pay tax under forward charge mechanism on whatever OIDAR services are being given to non-taxable online recipient. Is this clear? Next is the levy of GST on airport dues, a small tiny circular. What happened here is that there are embarking passengers that you and me go to the airport and we board our flights. There is an airport operator who is operating the airport. Okay, they are basically operating the airport. Now they want to collect certain fees from you in the name of user service fee and passenger development fee, that is basically using the infrastructure of the airport, right? That infrastructure of the airport is being maintained by airport operator, not by the airline. So what happens here is they want to levy a certain charge on you, but it is very difficult, right? How will they levy? Do you think it is feasible for someone to appoint at the gate and to collect 20-30 rupees, whatever this amount is, from the embarking passengers? Answer is no. So what they do is they ask the airline companies to collect this particular amount from their behalf, because Indigo is anyway selling you the ticket. So in that ticket fare, 2-3 amounts will be added. For example, USF, PDF, this will be added. This will be collected and paid to the airport operator. Now the question comes that here, who is the service, who is a supplier of the service, who is the recipient of the service, and what is the role of Indigo? So pay attention, everyone. Indigo is merely acting as a pure agent, nothing else. Indigo is acting as a pure agent, nothing else. Airport operator is the supplier here, and embarking passenger are the recipient here. Is this clear? Embarking passenger are the recipient, airport operator is the supplier, and they are acting as a pure agent. They are not going to apply GST on this amount that they are collecting on their behalf. The GST liability will be on the airport operator. I hope this is clear. Now there are certain other interlinked aspects of RCM that will link to various chapters. So let's see quickly. If a supplier is engaged only in RCM supplies, so let's say my turnover is 100 CR but entirely is under RCM. Now what is the point of getting registration? No, I don't need registration. This is covered in chapter number 8, section number 23. I don't need to apply for registration. Can supplier take ITC on inward supplies used for making supplies on which RCM applies? No, because what is the use of ITC if I'm not going to pay tax? If I'm supplying to you and the RCM is going to apply, then I don't need to pay tax, right? So what will I do of my input tax credit? Plus you will link this to rule number 42. You remember rule number 42, chapter number 7 ITC. There we have clearly covered this part that RCM outward supplies are considered as exempt supplies, and if your supply is exempt, you cannot take ITC. Okay, next, if a person that is the recipient liable to pay tax under RCM, and let's say he is not currently registered because his turnover might not be crossing the threshold, does not matter, he will have to go for the compulsory registration under the GST. Next, recipient can take ITC of the GST paid on RCM, yes, and plus understand that the RCM liability needs to be paid in cash. I will quickly cover this here. Let's say I am a person, I am receiving an inward supply on which RCM applies. Now this is an inward supply for me. Okay, this is an inward supply for me. So will I be taking ITC of that tax? 100% yes. But another point to be noted is whatever this GST liability will come with respect to RCM, I need to pay in cash. I cannot use my existing ITC. Why so? Because ITC is used to pay output tax. This is not my output tax. This is my input tax. This is my input tax. I'm going to take the ITC after I pay it, but the payment will happen in cash mode, not ITC mode. Next, we will start with composition levy. Composition levy is divided into two parts, 10(1), 10(2) versus 10(2)(a). 10(1)(2) is basically 10(2) is nothing. It is just the conditions of 10(1), and 10(2)(a) is with respect to services. Now, what is services? Understand. 10(1), 10(2) is for goods and restaurant service. For other services, 10(2)(a) was introduced later. All the conditions with respect to 10(2)(a) are inculcated in 10(2)(a) only. Unlike in 10(1), there is a separate subsection with respect to conditions 10(2). So 10(1)(2) versus 10(2)(a), right? Clear? Now what is composition levy? Understand that the people who are registered under the GST, some people are not they are not operating at a very big level. So I will give you a limit. I will give you a limit of the turnover, aggregate turnover. So if that aggregate turnover is not crossing the threshold, then you can go under composition levy. It is basically a simplified form. You don't need to file all the returns that you have to file as a normal regular scheme. So here we will give you some benefit of the returns as well. And what you are going to be doing is you are not going to be taxing anyone. You are not going to get the ITC. You will, in simple manner, you will just pay a small percentage, that is known as composition levy, out of your turnover in state. So whatever your GST, whatever the turnover of your GST is for that particular period, you will pay 1%, small percentage. I will tell you the percentage of your turnover, and that will be your cost. You are not going to be charging that from anyone. So that will be your cost out of your own pocket. It will be your expense that you will be booking. Okay. So basically it's a simplified form. Like in income tax, you have the presumptive taxation. In GST, we have a composition levy, right? So let's start. Notwithstanding anything to the contrary of this act. So whatever goes against us, we are going to be subsiding that. We are going to be notwithstanding that, but subject to 9394. So we are going to respect 9394. So if a composition levy person receives RCM supply, then he has to comply with RCM, except in two cases as I covered: commercial property renting and security personal renting. So understand, a registered person whose aggregate turnover does not exceed 1.5 CR. Now the limits that I'm going to give you is 1.5 CR, 75 lakhs and 50 lakhs. 1.5 CR and 75 lakhs is with respect to 10(1), and 50 lakhs is with respect to 10(2)(a). Now 10(2)(a) is with respect to other services for every state, but here 1.5 CR is for every major state, and 75 lakh is for certain states where we give them the special category status. Okay, so if your turnover in the preceding financial year did not exceed 1.5 CR or 75 lakh in special category states, then you have an option. We are not forcing you. You have an option that instead of paying the GST, CGST, SGST, you can pay the composition levy. You can pay the composition levy. That will be from your own pocket. And what are the rates? It depends on your status. In respect of goods, you can be a manufacturer or trader. If you're a manufacturer, you will pay 0.5% plus 0.5% of turnover in the state. And if you're a trader, you will pay 0.5% plus 0.5% of not turnover, taxable turnover in the state. So here the exempt part gets excluded. You don't have to pay composition levy on the exempt part. Why? Because trader do not earn that much margin compared to manufacturer. So this is a relief given by the CBIC. You don't have to apply any logic for that. right? Apart from that, if you are in a restaurant service, so restaurant service is covered under 10.1, but other services are covered under 10.2a. Okay, so this earlier benefit was given only to restaurant service, where the rate would be 2.5% plus 2.5% of turnover in a state. Now there is one small point I need to discuss with you before going further, that what is the meaning of aggregate turnover and what is the meaning of turnover in state. Kindly pay attention everyone here. Aggregate turnover means the total turnover all India basis of all your GST. So let's say I have a unit in Maharashtra, I have a unit in Kerala, I have a unit in Tamil Nadu, whatever your GSTs are, in whatever state you are, the total turnover is considered as your aggregate turnover. Now where do we use aggregate turnover? We use it wherever we have to see the level of the company operating, for example in composition scheme, for example in liability for registration, for example in QRMP scheme in returns. So there we use the aggregate turnover. But where do we use the turnover in the state? Wherever there is any issue with respect to the payment of taxes, because see, a payment and the return filing, actual return filing will be done by a particular GST. So turnover in a state is the turnover done by that particular GST. Now that turnover can be anything. It can be intra supply, inter supply, export supply, I don't care, but it is done by that GST. Because when the payment of taxes will be done, when the payment of composition levy will be done, a particular GST will be doing it, not on all India level. As a company, let's say I have 5 units in 5 different states, we are not going to be filing one return. Every GST is going to be filing its separate return. So payment and payment related things happen, and the rates are linked to turnover in a state. But whenever I have to see the eligibility, whenever I have to see the liability, whenever I have to see as a company whole at what level the company is operating, I will be focusing on what aggregate turnover. So that's why here when I had to check the limit, I have to check the eligibility for composition scheme, I use the word aggregate turnover. But when the point came with respect to the payment of composition levy, I use the word turnover in the state. Is it clear? Now please understand, in the 10.1 also, which is primarily for goods, the composition supplier are still allowed to have a marginal limit of services allowed. So for example, I am dealing with goods, but I may be providing repair services, I may be giving some other after sales service. So marginal limit of services should be allowed, because see, if I do not state this particular limit, then it is given that I am not giving any services, right? It is assumed that I am not allowed to give any services. So that was something of an hindrance, that was that was not right. So law has given you a marginal limit of services that you can do apart from your main manufacturing or trading or whatever the case may be. Is it clear? So what is this limit that up to which you can give the marginal limit of services? Pay attention that the supplier may supply services other than restaurant, because restaurant is anyways mainly covered in 10.1. What is the limit? Your preceding year turnover in state means your GST's turnover in state, 10% of that or 5 lakh, whichever is higher. So let's say my preceding year turnover in a state was, let's say 70 lakhs. So I will take 7 lakhs or 5 lakhs, whichever is higher. So in the current year, in the composition scheme, along with the goods, I can do services. I can deal in services up to the level of 7 lakhs. If it crosses 7 lakhs, I'm not eligible under 10.1. Is it clear? This is very, very important. Okay. Now certain points to be noted, everyone. In the entire composition chapter, be it in the turnover of state, be it in the aggregate turnover, be it in the composition levy turnover in the state, you are going to exclude interest and discount, which is exempt under chapter number 4. You will be excluding the interest or discount whenever you talk about these kind of turnover in the state or aggregate turnover. This is something you need to note. Okay. So for example, 70 lakh was my preceding year turnover, but out of that 8 lakh rupees was, let's say, interest. So you will do 60 to 10%, that is 6.2 lakhs or 5 lakhs, whichever is higher. The service limit is registration wise, that I've already told, because they have used the word turnover in a state. Now there are certain conditions. These conditions you don't need to learn by heart. One or two conditions are important. I will tell you that. Pay attention. You should not be engaged in supply of services except the one that we have provided in subsection 1, that is the marginal limit. Second, you should not be making any supply of services which are not leviable to tax, but currently there is no non-taxable service in GST. This is important that you need to note, that you should not be making any interstate supply of goods services. So interstate purchase is allowed. Interstate purchase is allowed, but interstate supply of services is not allowed. Clear? You should not be making any services through a ECO which is required to collect TCS. Goods are allowed, but certain conditions are given. I will be covering this in chapter number 12. Notified goods manufacturing is not allowed. Here also I have mentioned that you should not be producing notified goods. Now, why this notified goods exclusion is given, I will tell you that in a couple of minutes. Please wait. And you should not be a CTP. You should not be NRTP, because these are already a specific type of registration. You are coming there. You are in the, let's say for example in CTP, you are there for 5 days, 8 days, 10 days. So in that also you want composition levy? No, please go under normal CTP registration. Okay. And when I talk about 10(2)(a), that is for other services. Now what is the difference when compared to 10(1)? Here the limit is 50 lakhs. That is for all the states. Here the rate is 6%, that is 3 plus 3%. Now if you pay attention, everywhere I have stated 3 plus 3 or 0.5 plus 0.5. Why? Because interstate supply is not allowed. Only intrastate supply is allowed. So it will always be CGST plus SGST. Another point to be noted, the main condition for being eligible under 10(2)(a) is that you should not be eligible to pay tax under 10(1). The fact that I may not be registered under 10(1) is not relevant. You should not be even eligible to pay tax under 10(1). Then you can come into 10(2)(a). Is it clear? Conditions are almost same. You don't need to pay any separate attention here. The only point is you should not be engaged in any supply of goods also which is not leviable to tax, because this is a primarily for services limit. The composition scheme is for services. So you should not be engaged in any non-taxable goods. You know in GST there are 3 non-taxable goods. This is something that is missing in 10(1). But I don't think this is testable. I don't think you should be paying much attention to this. Now, as I told you, 75 lakh limit is for which states? Certain northeastern states where the volume of business and population is not very high. So you can read this list twice or thrice, then the things will strike in the exam. That Arunachal Pradesh, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim and Tripura. So a short form Suman T, and T will be Suman will drink tea 3 times in Manipur, Mizoram and Meghalaya. So something like that we learned in the class. You can also try to do that, but twice or thrice reading is more than enough. Another important point to be noted, everyone, I cannot have a situation where let's say I have 10 units and 2 of them want to go under the composition scheme. No, everyone will go into composition scheme or everyone will stay in the regular scheme. Okay, so everyone will have to opt for the scheme. I cannot have partial units opting for the composition scheme. 50 lakhs turnover limit I have told. The composition levy will lapse from the day on which the aggregate turnover exceeds the threshold. So in short, you have to check the limit twice. First, you check whether the preceding year turnover does not cross the threshold. If it does not cross the threshold in the current year, you are welcome under the composition scheme. And in the current year also, you are welcome in the composition scheme only till that date on which till the date your total aggregate turnover exceeds the threshold. So let's say in my current year on, let's say 28th of September, my turnover exceeds the threshold. 150 lakhs, let's say. So from 28th September, your scheme will lapse and you will have to go into the regular scheme. As I told you, you're not going to be taxing anyone. You're not going to be charging tax, and you will not be taking ITC. Whatever the composition levy is there, you're going to pay from your own pocket. These 2 points I will cover in a couple of minutes with a small example. Reasons for opting composition scheme: basically the procedural compliance is easier. You just need to go for 5 filings. One is the quarterly payment in CMP 08 and one is a yearly GSTR 4. Okay, so that is done. RCM supplies received by composition supplier. Yes, you have to comply with RCM except in 2 cases: security personal and commercial property rent. Disclosure in bill of supply. Now basically instead of tax invoice, you will be issuing a bill of supply because you are not going to be taxing anyone. So no tax invoice, you will issue a bill of supply, and on that you will clearly write, along with that, on your disclosures on your places of business, you will be writing that we are composition taxable person, we cannot collect tax. Similarly, in your place of business, you will be writing composition taxable person as a disclosure. Now there are certain products where the manufacturing is not allowed. So if you're a manufacturer of these products, you cannot go under composition scheme. Why? Because there is a very high tax collection by the government. So they don't want you to go under the composition scheme. They want a GST at a proper rate. Okay. So what are these products? These are all those products where you remember in your childhood, your mother used to say that stay away from these things. Okay. This is something we learned in the class. Ice cream and edible ice, whether or not containing cocoa, this is a flavor, so it does not matter whether or not it is containing cocoa. Ice cream and other edible ice, stay away from it, you will have a bad throat. Pan masala, tobacco, aerated waters, bricks. Now till this point, pan masala, tobacco and aerated waters, stay away from these bad things, bad stuff. And apart from these bricks and roofing tiles, so while walking, pay attention whether it's not falling on you. So this is something that students recommended in the class. in a fun manner to learn that stay away from ice and ice cream and aerated water, stay away from tobacco, pan masala, and pay attention on whether any work is going on, otherwise a brick will fall on your head. So this is something in a fun manner that you can learn, that these manufacturing is not allowed, trading is allowed, manufacturing is not allowed. Okay, and intimation to opt for composition scheme I will cover. Just give me now 2 minutes. 2 points I need to note. First, I will tell you the opting of the scheme. Opting of the scheme. Pay attention. When you apply for composition scheme, now when can you apply? See, if you are a new registration, you are taking a new registration, you can apply from the first day. But if you are in existing registration, you are already GST registered person under regular scheme, and now you come to know about the composition scheme and you want it. So here you will file the intimation by the end of the year. That is the 31st March, and from 1st April your scheme will start. Okay, but if it is a case of withdrawal, please pay attention. Reasons for withdrawal can be anything. You can voluntarily go out, your limit can be crossed, your conditions can be breached, anything. So pay attention here. Case can be of voluntary withdrawal. Let's say you file an intimation on 2nd October where you're voluntarily withdrawing from the composition scheme. Here effective date of withdrawal can be 2nd October or maybe a future date. That is, you will state that okay, from let's say 1st November I want to go outside the composition scheme. So you can do that. If there is any condition breach, so you were provided certain conditions, let's say you make an interstate supply. So here within 7 days from this condition breach, you will have to file a intimation that is in CMP 04, and the effective date cannot be any future date. The effective date will be the date on which the scheme has been lapsed. It cannot be future date, because how can you determine that my condition is going to be breached on this date? Okay, and also it cannot be prior to the financial year commencement. Basically, these are procedural aspects. The composition levy works on FI to FI basis unless you are a new registration. So it same applies on the withdrawal basis also, that your withdrawal date cannot be prior to financial year commencement. So at least, let's say for example, in the month of May, there is a condition breach. So from the month of May, from that particular date only, you are going to be falling under the regular scheme, and within 7 days you will be filing for what? The CMP 04, that is the withdrawal form and intimation. And obviously that date cannot go before the 31st March date. So financial year, in the same financial year, you have to file the intimation, and otherwise the time limit is 7 days. I know this is a bit confusing. This is a lot of procedural aspects, and ICM material has not given this in detail. But I'm trying my level best to give you the pointers. Pay attention. The main point is applying part, not the breach part. But still we will cover that if there is any breach of conditions and the tax authorities now deny you the scheme. Again, CMP 04, within 7 days of breach, effective date, the PO will determine, because they have caught you. But again, it will not be beyond the breach. So let's say my breach was on 6th of October and I did not file any intimation and I was caught in the month of December. So max to max, the retrospective impact will be from 6th of October, because that is the date you conducted the breach. You fell into the breach of the conditions. So this withdrawal part is not that relevant. It's okay if you just read it through. But this is important, that if I want to apply for composition scheme and I'm a new registered person, that I can come from the first day. But if I'm an existing registered person, then 31st March, and from 1st April it will start. Now last 2 points. The one point is done with respect to the applying and withdrawing. The last point is with respect to the 2 paragraphs that I left. I will cover that through a short example that is of your material itself. Let's say I'm a new photographer. So 10-2A, I'm going to link. I'm a new photographer. I'm starting my business from 1st of April 2025. 1st of April 2025, I start my business. Okay. Now let's say my turnover data is given April, May, June, July, August, September, and October, November, December. So April to June, my turnover is, let's say, 20 lakhs. July to September, my turnover is 30 lakhs. And October to December, my turnover is, let's say, 5 lakh. Now pay attention. In April, May, June, will I be paying any GST? Answer is no, because I am not yet registered. Composition is a type of registration only. I am not yet registered. At the end of June, yes, I have to go for registration because my 20 lakh limit is being crossed. So in July, September, I go under the composition scheme. So on 30 lakh, I will be paying my 3% plus 3% of composition levy. Will I be paying any kind of composition levy on 20 lakh? Answer is no. Why will I not be paying? Because this 20 lakhs is when I'm not in GST. Okay, so no payment on 20 lakh, but yes, it will be a part of the aggregate turnover. It will be a part of aggregate turnover. So here 20 lakh and 30 lakh, now at the end of September, the total is 50 lakh. Now my composition scheme will exit, and on 5 lakh, I will pay my normal taxes, my normal GST. I will not be under composition scheme. This is how the flow works. So April to June, yes, it is a part of aggregate turnover, but I will not be paying any taxes on that. Is it clear? Apart from that, I'm again hammering one point that interest discount income. Interest discount income is to be excluded from every type of aggregate turnover, every type of turnover in the state. Whatever you cover in composition scheme, interest discount is to be excluded. In general, it is not excluded because aggregate turnover includes all the types of supply, be it an exempt supply, be it an export, zero rated, intra, inter, whatever it may be. Is it clear? So with this, we have invested 1 hour, 20-30 minutes, whatever, for composition scheme and entire chapter number 2. I hope this was clear. Just one request, if you genuinely like the lecture, because these are a complete separate revision series that I'm running for you guys, so ensure that you drop a feedback and you share it with your friends. And yes, this was all for today, so we'll meet in the next revision lecture. All the very best, study well, take care, be safe, bye bye.